Hey, what's going on, guys? So just wanted to do a quick recap of where we're at with US30 so far. So today is Thursday. Most of the week is over. Now, I want you to pay attention to this low of the week that was made on Monday. They traded instantly higher, but what did they leave right here? A gap. Now, this isn't a perfect price gap, meaning that it doesn't just leave any empty area. The wicks at least cover all the spots. But you can see right here was the gap. We call that an opening price gap at the beginning of the week. So if you're in the Telegram group, you actually saw that I tagged all these levels here. So, and I'm going to just put this here because this is that low of the day here on US30. So the highest up closing candle on the week would be this bearish order block here. Now, we can consider all of this an order block because it's all connected, but I'm just going to mark this one. Once we drop down to an hour, that would disappear. Now, I want you to pay attention not just to this order block, but to this level specifically here, which is the highest close. This is going to be our rejection block. So the rejection block is essentially going to act as resistance, right? If price is trying to get through that, if it can't close higher, it's likely going to meet resistance there. So top down to a 1 hour time frame, talk about how we could have used this. Now, I'm going to go ahead and reframe just the body of the order block. So you can see we were here, and now we downsize to this level. That rejection block is still here. And you can see on the 1 hour, we traded through it and created another order block. So if we were just using the 4 hour, we'd stick with this order block here. But because we're hopping down to the 1 hour, you would readjust it because this one closed higher. You always want to be looking for the highest up closing candle in the range. That's going to give you really your best chance at getting solid order block. Now, we highlighted a specific level on this order block. We talked about how on, what was that, Wednesday, we did not want to see them. They could wick it, but we did not want to see them close above this. Now, again, you can see this all in the Telegram and Discord group. I always link it in the description, but we called out all these levels before any of this happened. So it was not able to go through here. So on the 4 hour, what we were looking at was we were looking at specifically this bullish order block. Now, why this order block? Because one, it was so large, and I knew that if it failed to support price in here when we were bouncing around, then it would most likely go where? I knew it would most likely go down and stop out the low of that order block. Now, the flashcard that I sent, I gave two levels. The first target would be here, and then the second target would be that low. So let's go ahead and check that level out. So as we drop down to the 1 hour, I want you to see we don't get to that mean threshold and we start trading down. Now, this is a high probability order block because it forms a fair value gap. So once that formed, we had a really good understanding that we were, pretty likely to get down and stop out this order block here. Again, it failed to support it all the way up here, and the stop was all the way down here. Not just that, but as we were headed down to it, we had this opening week gap, which was pretty important. So that's just a quick cut up of this trade. Now, just to show you how you could have entered on one of these. So right here, you can see they set, it's almost like a double bottom, and you just use the exact same setup. So right here, we have a fair value gap, which means that we likely have a high probability order block. So right here, we mark that highest up close candle. I usually just look at this range. Now, if you would have entered short, your stop needs to be at least at the high of that order block to keep you safe. But I try to generally enter around the bodies. So as an example, you would go short with your stop above here. Say we went short at the body of the order block, and it goes down to about a 5 to 1, and then about a 4 to 1 just to fill that price gap. So this could have been a short that you were looking for. Also, you could have seen this fair value gap. Again, the fair value gap is right here. And so the fair value gap is there because we're not looking at anything but just the bodies. And the fair value gap video for the free academy is launching soon, so make sure you check that out. But we have this fair value gap here, and because that fair value gap formed, that makes this order block here high probability as well. which if we have two high probability order blocks in a row, that is what we call a propulsion block. And then we can generally look for even more accurate trading opportunities. Could have looked to get short about right there, 50% of the actual propulsion block. Now, once that gap filled, you can see today we ran right to the low of that order block, but I want you to see that we did not stop it out, right? This level wasn't drawn here. It was drawn, remember, off this 4-hour, this bullish order block here that failed. It failed to support price. So it reaches all the way back up to the high of the day, which is sitting where? Right at Asia's high, and has that price gap there. So it runs up, back on the other side of the price gap now. Remember, the price gap was sitting here. We traded through it and now back up into it. And we just simple break and retest down to the low of the day. Now, we caught this short live in the VIP group. VIP group right now is actually free. I'm trading for free every day, Monday through Friday, with the students. So we actually caught, like I said, this short. We got stopped out here and here, but then caught it one more time. We only lost about 20 points total, and then we went up for over 100. Yeah, it was about 185 points we caught, and then actually ended up catching a long in here as well. You can see that if you watch the live, it's a shorter live. I did like a separate recording where I just recorded this one trade that I took. It was a long in here. It's actually on the 1 minute and was just taking a scalp. So just to cover that real quick so no one misses out. Again, we have an order block right here. And how do I know that that's a good order block to use? Because right after it, you can see a fair value gap is formed right here. Now, if you're still not familiar with fair value gaps, like I said, I'm going to be posting a video about them soon in my free trade academy. It's already there. It's going to upload soon. So make sure you check that out. But I'm using that order block because of this fair value gap. When it trades into it, you can see that we want to go long or try to go long around 50%, somewhere between the high and 50%. And then usually our stop goes below the order block. If we're on a 1 minute chart, this is probably a really great tip if you're a scalper. I do not want to put my stop right there on that level because majority of the time, or at least I want to be comfortable with re-entering, because majority of the time on the 1 minute, you're going to get popped right there. Even if it doesn't hit you, you might get tapped with spread. And so it's great to enter on the second pass, but make sure you're giving your stop just a little bit of room right there. And again, I want you to see that there's no reason for them to go down below that red line, because this was the stop loss on that 4-hour bullish order block. So they didn't need to do any more work down there. They ran up. Where did they run to? Right here in our price gap. All right, guys. Let's go over one more quick thing that I liked here. You can see at the low of the day, this is a setup where I wouldn't say it's free money, but essentially it's a really easy and a really great setup once you learn it. You can see Euro cannot make it below that previous low of the day. Now GU right here, let me just show this. GU's already punched through its previous low of the day and the day before and then some. So what do we see? We can see that we are below the London session. Well, if we look at Euro, you can see Euro was failing to trade below the London session. What does that mean? That means we can most likely look for a buy in these pairs. Now, you have to look for confirmation with dollar and understand your market, but because right here, GU is dipping down and Euro is not, you could either buy this setup here at the order block on Euro, or on GU, you can look, and I'm bad about always bringing it down to the 1 minute, but as it runs below this level, you could look for a high probability bullish order block. Like, man, price is going crazy right now. You could look for a high probability bullish order block. I think Powell's actually speaking right now, so I'm sure that's what's going on. Again, fair value gap right here, order block, last down close candle there. Once it trades into it, you could have gone long, and that would have been a massive trade there. We saw another one at the high. You can see GU did not take out its high of the day. and Euro took out, or excuse me, that New York session, and then Euro took out that New York session, which still running pretty crazy. So that's awesome to see. But all right, guys, that's going to be it for today. Appreciate you checking out the video. Let me know if you have any questions. As always, peace out.